Good morning. It is Wednesday. It is Hump Day. It is also Fed Day. And Fed Day is a very big day in the markets because today is the day that Uncle Ben and his merry men of thieves, other governors, decide that what they're going to do with interest rates. Now we know one thing for sure, they are not going to lower interest rates because they're already at zero. We also know that Ben Bernanke is going to continue to help out the banking cartel and continue to help them bail out of their toxic debt and toxic assets. In other words, the Fed program is strictly to help the Mr. Potters of the world and the very wealthy. It is not designed to help the average Joe. As you can see, that jobs continues to be bad and we have trouble employing people. We also see that the average Joe is still having trouble providing liquidity to his or her small business. So what does it mean? Well, what we're looking to see from the meeting today is if there's some more dissenting opinions. If you've noticed over the last couple of meetings, you are starting to get some of the Fed governors that are not in total agreement with Ben's policies. And if the policy starts to change, what the market has been thriving on now is on bad news. And why are they thriving on bad news is because they know that Ben is going to continue to infuse capital into the banks, and if you're of the very wealthy, it will allow you to borrow money at almost nothing. And if you have a business that you know that can return 10 or 11%, you can borrow money at 3%. That's a pretty good trade. That's one of the things that the banks have been so beneficial in is, although nobody would admit to it, is that if a bank can borrow money at zero from the Fed and then turn it over to the U.S. government at 3% and at a 30-year bond, backed by the full faith and credit, that they can make a 3% spread on a loan with zero risk. So it's something that we have to watch out for. But what you want to start to focus on is at some point the Fed governors are going to decide that this is no longer the right way and the right tack for business. At some point the Fed is going to start to pull its funding. And I guess that'll be when the banks are totally bailed out. But it's something that under issue that you have to watch that will have a very dramatic effect on the market. But the good news is that will finally allow the market to trade freely without the artificial stimulation that the Fed is offering here. It's very important to understand what's going on as we can see when the markets are trading, they are not trading freely. And one of the things that you want to take note of, and if you go back in history, you'll see that every time there has been Fed intervention, the ending is never pure. It's always an ugly ending because eventually when the Fed pulls out the money, there is no money, and they again trap the late money up at the top of the market, because right now everybody knows that all you have to do is step up and buy the dip. So what we want to focus on is, again, we're not going to try to guess what he's going to say. The bond should have a pretty big move today, one way or the other. The stock market will have a fairly sizable move, probably 2 or 3 moves today, based on interpretation, and then we'll get the actual trend. But know that the market will not lower rates, and 99.9% they will not raise rates. But what you really want to listen for, and what the markets will react to, is the language that they come out with and how the opinions of the other governors came out from. And that's what we're going to look for from this Fed meeting. So just remember, watch the tape, watch your charts, and be ready to go. Remember that we'd love to have you on the Monday night Average Joe Options call. I look forward to seeing you there. If you want some more information, Todd at AverageJoeOptions.com. For Wednesday, the Bubba Show. We'll talk to you Thursday.